one of the things, if you do create an AGI, there are probably lots of them doing specialized things. One could be a human assistant, and one could be a travel specialist or something that can look into creating trips for you. They'll probably need to communicate and pass value between each other. And what currency is ideal for transmitting value on the internet? Bitcoin.
An astonishing amount of new productivity with AI tools actually makes the debt, orders of magnitude more difficult to pay off without the inflation, unless you are accruing it in Bitcoin purchasing power. What's $1 million in debt when Bitcoin purchasing power is $10 million? It has to have a currency that can accrue that value in comparison to what our debt is denominated in.
What's up, Sats fans? Welcome to Swan Signal. I'm your host, Sam Callahan. I'm the lead analyst at Swan Bitcoin, and we have another great episode lined up for you guys today.
If you care about your financial future, you need to check out a couple of our offerings, including Swan IRA and Swan Private. Swan Private is our white glove concierge service where you get a trusted partner on your Bitcoin journey. We offer all kinds of education and research projects, as well as exclusive events to our Swan Private customers. Check it out today at swan.com/private. Also, Swan IRA. Swan IRA is the best way to gain exposure to real Bitcoin in a tax-advantaged account, like a traditional IRA, a Roth IRA, or rolling over your 401k. So if that interests you, check it out at swan.com/IRA today.
Two guests that were paramount in my own learning of Bitcoin. We have Guy Swan, who's the host of Bitcoin Audible, and we got Vijay Boyapati, who is the author of The Bullish Case for Bitcoin. It was the best blog post that I read back in, I think, 2017, 2018, Vijay, but then turned into an amazing book that's on my bookshelf. So welcome to you both. I'm really excited for this conversation today.
Thanks for having me, Sam.
Yeah, man. Good to be here.
Yeah, man. I wanted to start with Vijay. Vijay, you've been kind of quiet over the last year or so. I was wondering where you've been, man. How are you?
I've been focusing on being a dad, actually, for
Nice.
much of the last year. We had our fourth kid, and it's our last kid, and it's such a special time. And I wanted to spend a bit more time focused on that, and so I haven't spent as much time on Twitter and what's happening in the Bitcoin world. But that topic is in really good hands. There's a lot of great people at Swan and elsewhere who have been providing a lot of great commentary. So I've been just kind of following along and not contributing too much. But hopefully, after you get out of the first year, things become a little bit easier. So I'm hoping I can get back into things and do interviews and maybe a bit more active on Twitter.
Yeah, man. I mean, we just miss you. You're such a great voice, but honestly, family is probably more important than Bitcoin, I would say. So, congratulations on the new kid, and really excited to have you on today. And Guy, how are you, man? How have you been?
I'm doing good. We're in Rad just turned a year old too, and I want to thank again. Vijay and fam got some toys for him when we were at BitBlog Boom, and he loves this little ball that has a little light up thing when he rolls it around. Freaking loves that thing.
That makes me really happy to hear, Guy.
Yeah, man. We really appreciate it. My wife was all just huge smiles. She was like, "Oh my god, that's the sweetest thing ever. I love it."
Well, there's a saying in Bitcoin, it's for the kids. We're kind of building something that's going to last generations. And this is about changing the monetary system. When we look at the traditional monetary system, things aren't looking that sustainable, I would say. And right now with the debt ceiling debacle that we all just went through, they once again kicked the can up the road. They raised the debt ceiling from 31.4 trillion. Now it's expected to get up to 35 trillion by 2025. So maybe throw it to Guy. What do you think of when you just see this debt mountain that just continues to grow, and yet politicians just continue to kick the can down the road, paper over these long-term problems for future generations to grapple with?
Well, the problem is is that like the whole idea of the debt ceiling is just kind of, I mean, it's a pure example of theater, because there's no way for them to really lower it. You know, it's part of the dilemma of having the reserve currency, but then also a currency that is literally issued as debt, is that you always owe more than exists. You know, like if you issue $100 into existence and you owe it at 10% interest, you owe $110, and you've issued $10, 100 into existence. So you have this feedback loop of the stress of needing to pay back is always worse than what you actually have available to you. And I don't see how, like, just kind of from a mathematical perspective, I don't see a sustainable way that we could not run deficits because of how the monetary system literally works. And we would have such a massive deflationary push, like we'd have such a credit crisis because we wouldn't be able to sustain the debts we already have without issuing enough to even simple business as usual, but in addition, pay off the interest. I mean, you like look at the Treasury books or whatever they release, like just a massive amount of it is going to interest, and that's with the staggering amounts of low interest debt that they're holding. And every year that the bonds roll over, they're essentially holding the same debt. They're refreshing the same debt that we have at higher and higher interest. And we're in the period where they've raised interest rates faster than they ever have in history. So, I mean, it's just a mess. Like all the idea that there's like legitimate talks of like lowering the debt. Like, I mean, the quote unquote compromise was increasing the deficit less than they planned. Like it's so comically off of like what needs to happen. Like it's not even a question of whether or not we raise the deficit. Is literally an argument about how much we raise the deficit. It's like saying whether or not, like, let's say we have like some really terrible, we have diabetes or something, and it's because we just eat massive amounts of sugar, and we just like, here's a barrel of sugar and this is what we eat in sugar every year, and what we need to do is stop eating sugar. And then we have a plan on the table of increasing that sugar by 2 buckets or 1 bucket. And that's the argument, is how many buckets of sugar do we add to our problem? And it's just such a show. It's such a gimmick. And the idea that we're having some sort of a compromise or discussion and there's any sort of restraint here is just comical. To like, I don't know how else to put it. It's just silly.
Yeah. Vijay, do you have any thoughts on the debt ceiling getting kicked back and kind of the unsustainable nature of the fiat system right now?
Yeah, I completely agree with Guy that this is just political theater. There is one concept that I don't think is discussed much, but I think is really important. It's the distinction between political default and economic default. Political default is when the institution which owes the debt, the nation state, is just politically incapable or is in gridlock and doesn't want to pay the debt, just refuses to pay the debt. The other is economic default, which is much scarier, which is when the nation state is incapable of paying the debt. And an example of this is the Weimar Republic. Go back in history, into German history, and they were simply incapable of paying back the massive mountain of debt that had been imposed on them by the Allies after World War I. They just didn't have the ability to service the debt. And when you have this huge debt, there are really 3 ways you can solve the problem. You can cut spending, which is politically very, very difficult. You can increase taxes, also very, very difficult. And actually, increasing taxes has a limit. There's a number at which, even if you increase the tax rate, you don't collect more revenue. And the most that the US has ever collected historically is about 20% of GDP. So this is even when tax rates were above 70%. You just can't get more blood out of the stone, is my point. So it's both politically difficult to raise taxes, and there's a limit on how much you can actually raise doing that by increasing the rate. The third method is the method historically chosen by most nation states because it's the easiest politically, and you can kind of blame everyone else but yourself, is to inflate the money supply. If you inflate the money supply, then the debt burden goes down because the real value of the debt is much lower with a lot more money out there. And that's what happened in the Weimar Republic. The reason I bring up this distinction is because what Guy says is absolutely correct. This is political theater. But I also believe, and this may be controversial as a Bitcoiner, I don't think we are yet close to economic default in the US. I think we're at least maybe a decade or so away from that. And the reason I say that is the debt service, even with interest rates higher right now, is still manageable. It will become unmanageable for the reasons Guy gave, in the coming years, because we're accumulating more debt and debt is rolling over. Low interest rate debt is rolling over, and we have to refinance that at higher rates. So it's going to get harder and harder to service the debt, but we're not there yet. There are other nations which are in worse positions. An example of this is Japan, which has a much higher ratio of debt to GDP. And so if interest rates rise in Japan, they're already using, I think, 50% of their budget just to pay the interest on their debt. So if interest rates go up even a little bit there, they're just completely wiped out. But we are on a path that's really bad and unsustainable. And it's particularly bad for the whole world because the US is the reserve currency of the world, and the US inflating its money supply to make it easier to pay down its debt has implications for all countries around the world. So I think this is the coming decades are actually structurally very good for Bitcoin because the US is in a bind. It's just politically too difficult, especially given the polarization in the US. It's too difficult to do the things that you need to do. Cutting spending is probably the most important thing we need to do. We spend way more than we bring in, and it's just not sustainable. But in a democracy, you get really strong entrenched interests, and they are voting blocks. And how do you cut Social Security? Well, you can't cut Social Security because you have all of these elderly US citizens who will very vehemently object because it's in their personal interest that Social Security continues. Whether or not the nation defaults is kind of an amorphous concern that they have less care about. What they care about is the paycheck coming in that they need to go buy groceries with. So what you have is you have political capture. All of these interest groups are being paid. So we just can't do what we need to do. And this is why I'm so bullish on Bitcoin, because I think structurally this is a problem that's very unlikely to be solved. And it's going to just end badly, as it always has, with the government choosing the easiest path, which is to inflate the money supply which is what you would call a soft default. I think the US is going to default eventually. It's just, how does it do it? I think it does it through the path of inflation.
Yeah, one of the things that you brought up there that I think, particularly in the realm of like the timeline, is that every single time this default happens with Japanese yen or like some other country first, it will actually put a positive pressure back towards the dollar. Like they'll in searching for an exit, people will naturally, it's the global reserve still to this day, despite lots of fracturing and obviously the shifting geopolitical space. But I think we'll just continually see large swings. I think we're just entering kind of the age of volatility when it comes to all currency. And the dollar will go through huge deflationary periods where it's worth more. And then we'll have these credit crises and these like, oh, we're actually being sticklers and, having restraint about this, but also we're also guaranteeing everybody's deposit. And we're giving like free loans to all the huge banks, and they can't even buy banks that are going out of business anymore. Like the appearance of we're not creating money, but everybody's getting free money. And then we'll go back through I think it'll cycle back through and we'll have another spike. Because I mean, again, it's just a matter of time, and it would need such a huge political shift to even begin to fix. And not only is the political shift not happening, we're not even getting like a small political shift in the right direction. It seems to be kind of accelerating in the wrong direction, kind of all over the place. And so I completely agree that you just have to systemically hedge. You have to just get out as much value as you can.
Yeah, and the more you delay, the worse that problem gets. And I think Vijay brought up a lot of good points. When you talk about raising taxes, I think it was Switzerland came up in the news the other day. They raised taxes on the ultra wealthy there, and they expected to bring in about 150 million in additional tax revenue. Well, the wealthy just left, and it ended up being negative about $500 million in tax revenues when they tried to raise taxes too much. And then it's just a demographic issue when it comes to these entitlement programs. Stanley Druckenmiller was just giving a keynote speech, and he's talking about this problem. And he says, we're already spending about 40% of taxes on seniors when it comes to Medicare, Medicaid, Social Security. And in 20 years, it's going to be 60% of tax receipts right now, or tax revenues. And, what is the solution to that problem? And Vijay, you brought up when debt to GDP gets to certain levels, I think it's like over 120%. There's only a certain number of ways that you can get out of that. You can raise taxes, you can default, you can try to inflate it away, or I guess there could be a productivity gain, which a lot of people say that's impossible right now. It looks pretty bleak when you look at the productivity numbers. That is another way to kind of naturally grow yourself out of this debt problem. But the one area that I'm looking at where potentially it could lead to a lot of productivity gains is AI. And we've seen AI really take over the headlines. We had ChatGPT really come on the stage in 2023. So Guy, I know you've been kind of looking at AI. What are your general thoughts around it? And maybe how does it apply to Bitcoin?
Yeah, so AI is a really interesting kind of play or factor that has been introduced into this environment. Now, probably if we look like 10 years out, I think we could potentially see some huge productivity shift, but I don't think we're going to see a lot of it in the short run. Right now, we're still trying to figure out what to do with these tools. So this is actually what I started AI Unchained, the new podcast, for. Is the real focus was actually to I think there's a huge concern in recreating our same bad habits of centralizing and platform-based services with AI, is the surveillance problem and the control of individuals. This encompassing sort of top-down control that we've seen becomes an order of magnitude more dangerous and worse consequences if we're all just plugged into somebody's centralized AI. Not only do they have visibility into everything we're doing on a computer, if, when Windows releases their AI embedded into the operating system, but they have contextual understanding of everything that we're doing on our computer. And if you're not local hosting, like if you're not doing the computation locally, that's a nightmare scenario. But right now, a lot of it is still hype. And a lot of it, there's a massive amount of noise. It very much feels like crypto 2017. But one of the big things that I think is, luckily, is open source is moving very, very fast. One of the beautiful things about the natural elements of AI is that it's about who can teach quickest. As soon as the algorithm is released or the model exists, then the question is, can a community teach faster than a giant corporate entity? And they're developing in very different ways as well. But I do not think there will be this network lock-in, moat thing that we have seen with platforms, because the technology manifestly doesn't behave like that. It's not the same thing. So that's actually a really positive thing. But I think we will see this kind of double Moore's law happening, where not only does while our technology is getting smaller and lower cost, AI is also getting the hardware that it is able to run on is decreasing massively. Like just a year ago, people would have said that there's no way that you can have a local large language model. Like, it's just not going to happen. You need 10,000 GPUs. That's the only way to ever get a good answer. And now you can roll literally within a matter of weeks. The open source community, when Meta's model launched, leaked, it's called Llama. Within a matter of weeks, they figured out how to run the thing on a freaking Raspberry Pi. Like, I'm not even kidding. The 7 billion parameter model is slow, and you would never ever want to use it because you're constantly writing to hard drive instead of RAM, but you can run it. And I have run one locally that basically the user response to it is that it was 48.7% valued or preferred to 51.3% to Chat GPT. That is not a big gap. And we're talking about running locally on basically a high-end consumer device. And I think that's going to continue to change and evolve, where I think this applies to Bitcoin is just a bunch of builders. Like that's the really magical thing about this space, is that everybody is constantly trying to figure out how they can contribute. But there's also a lot of very computer literate, like very literate people from a technical aspect that aren't developers. I include myself in that group. I'm not a developer. I have been doing nothing but building scripts for months to accomplish little tasks using ChatGPT. The ability to make small batches of code that work by just asking it to do stuff is remarkable. I've brought this up on a few different episodes recently. Was like I've now got a script. I used to lose a day every month. Like when I'm working with tons of media. I mean, Sam, you probably know. But I work with tons of media, and I have uncompressed audio, like project files constantly, and I'm doing 10 different things at once. I eat up 400 gigs of data like nothing. 20-30 days in, and I'm out of hard drive space again on a 2 terabyte computer. And then I lose a day transferring, compressing, organizing, archiving, like just doing all that stuff. I'll just be in the middle of a logic project, and it'll just be like, you're running out of memory. We can't record this anymore. You got to do something. And I just have to stop and spend a couple hours. I spent about 40 minutes the other day writing a script with ChatGPT that whenever I just select the folder with my projects in it, and it will grab all of the relevant project files. It will individually compress everything in the folder, one project at a time. Then it will move the zip file to my Linux machine. Then it will verify individually each one that the uncompressed, the original project and the zip file are in fact accurate, and it's on the new computer. Then it will delete the original project file and just do that through the entire folder. So now when I'm running out of space, I've just been doing this every few days. And with AI and Chain being a video thing, I've got like 13 gigs per project with the video and stuff. So I do it. I just double click on this thing every day. And it archives the whole thing. And I archived like, I don't know, 600 gigs of stuff the other day while I was working on stuff. So I was recording and it was funny because it's just running live like in my terminal. So I'm hearing the little trash can like every 2 minutes or whatever, when it's done zipping and moving the next project or whatever. And so I'm just like recording, and I'm just hearing this for like an hour and a half or 2 hours while it's just cleaning up my computer. And I literally have like, just in the ones of the stuff that I'm using, I got like 8, 10, like 15 or so of stuff that I use all the time, like media compression and all this stuff that used to take me a long time now is just basically a double click. And as Bitcoiners realize how powerful these tools are, I think especially if we adopt them first, I think we can build so many features and simplify so many things and obscure away so many of little headaches and the little bumps in the road that people run into. Like this makes me quote unquote a developer, and I don't code. I know just enough to be able to kind of look at a block of code and be like, okay, it's trying to do this. And I know some simple tricks on how to easily troubleshoot it, but I'm able to build stuff that I never would have had the time or the energy to build before. And that's a big deal, I think. And I think more specifically is a really big deal for Bitcoin.
Yeah. Yeah. I mean, you just explained a lot of productivity gains right there. And now it could,
I think it'll just be very slow figuring out where to plug that into our workflows and stuff.
Totally. But maybe because Bitcoiners are more illiterate with code and more computer savvy, they'll be able to jump out ahead of a lot of other industries and build better products and services. And people that couldn't build before are suddenly can be entrepreneurs and build on Bitcoin. So very interesting take. I don't know, Vijay, if you had any thoughts around this AI boom that we've experienced in 2023, how it relates to Bitcoin or anything about it, but I'd love to hear your thoughts.
Yeah, you mentioned something, Sam, that I think is important, which is that this could be a huge source of new productivity in the economy. And one of the things, to tie it back to the previous topic, that I gave 3 ways to get out of a debt problem. And actually, you mentioned the 4th, which is really important. It is possible to get out of a debt problem in a good way. The one good way is you become so productive that you produce so much more wealth that you're capable of paying down your debt. It's just like if, these things at the nation state level are just like us with our personal debt. If you have like $100,000 in debt, you can default. You can't inflate your way out of it because you don't control the money supply. But one way is you can get a better job, or you can make more money, and it's easier to pay down the debt. And the same thing with an economy, you can become more productive. And I think this is going to disrupt a lot of industries. I mean, the obvious ones are content creation. Like if you're an author or you're making movies or something, those industries are going to be disrupted in the next 3 years. I mean, you can generate a book very easily now at low cost. It will become orders of magnitude cheaper to create a movie in the next 3 to 5 years. I find this pretty astonishing, actually. My background is not in economics or cryptography. My background is actually machine learning, and I came to the US to do a PhD in machine learning. And I never thought that we would be anywhere near where we are in my lifetime. To see what's happening with AI, it makes me think that maybe my skepticism that an AGI, an artificial general intelligence, was even possible was perhaps a little misplaced. And that, to me, it makes, for a really interesting topic as a Bitcoiner, one of the things, if you do create an AGI, there are probably lots of them doing specialized things. One could be a human assistant, and one could be a travel specialist or something that can look into creating trips for you. They'll probably need to communicate and pass value between each other. And what currency is ideal for transmitting value on the internet? Bitcoin is this trustless, decentralized currency, and it's 24/7. You don't want to, if you're an AGI communicating with another one, you don't want to transmit value through, the banking system, which is shut on the weekend. You want to transmit value on something that can be settled immediately, and that's Bitcoin. So it does open up this really interesting future where, if AGIs become possible, I can totally see Bitcoin becoming more valuable just by the fact that these AGIs will need something to communicate value or transmit value with, and that will be Bitcoin. I can't imagine anything. You're certainly not doing it with gold. You're an intelligence that lives on the internet. I mean, how do you physically transport gold? You're not going to do that. So it's fascinating times. I'm shocked at where we are with AGI. It's certainly possible that this could have, and maybe the presumption should be it will increase our productivity dramatically, in the same way that Moore's law did for 30 to 40 years, and then the development of the internet and the communication network that made possible. Both of those things massively increase productivity, global productivity. And this is something, probably as big, if not bigger than those things. The trouble is we just don't know.
Mm-hmm.
It's there are some industries where it's really obvious, where you're like, oh, okay, I can see how artificial intelligence is really going to disrupt that. But what about the rest of the economy? Is it going to be really limited? Are we going to see massive advances towards an AGI in the next few years, or have we seen most of what is possible right now? Like the language models and the prediction models and generation of images. Is there new frontiers that are unexpected? These are all completely open questions, and I'm really super fascinated to see how this develops, because it could be world changing and economy changing in a pretty short amount of time.
Yeah, one of the things that I think will change a lot, particularly when you talk about like content creation and stuff, is like kind of that vapid derivative content will absolutely plummet in value. Like it already like sort of has, but there has always been this degree of barrier where bad content with really big budgets can still kind of go pretty far. Or cheap content, I guess you say. Like great example is just like the weakness of Hollywood story in the last like 10 to 15 years. Like they're really just kind of like choke holding on the last little bit of value they can get out of the superhero fad, and it's so much of their storytelling ability has really kind of fallen to the goals of some sort of political message. And then also they've really valued basically their position and their perceived authority over the art itself. And I actually think one of the beautiful things about this is that this will release the trap of, or the kind of the cage around art in its medium. Like now the people, like literally the writer, the person who the story is closest to, will have such a small gap between actually creating the content that they see in their head that I think we'll see far more direct monetization and direct interaction with people who have real story. Producers are notoriously the ones who kill the heart of a story, in Hollywood or whatever. And what happens when the writer and two other people who like really care for their vision and a couple of really clever computer programs can tell the story without anybody else's help, and then they can simultaneously release it to millions of people on a platform. They just like they don't have to call up their agent, they don't have to call up a Hollywood like this, nothing. They're just not even part of the apparatus anymore. And that big budget wall of, you can't have a movie that looks legitimate, that looks big budget, without a big budget. The budget just kind of becomes irrelevant. Now with a skeleton crew, you can make any story you want.
Yeah, what does the world look like when something like Lord of the Rings can be produced for 1,000 or 10,000 times cheaper than what it was produced by? And I had this saying, and I was talking about Bitcoin a few years ago, that you can see the future in the present if you have a keen enough eye. And the example I think of with that is the telegraph. In the 19th century, you had this idea that you can communicate with anyone on Earth very rapidly. And if you really thought about that, you're living in the 19th century, you could kind of think of the implications and what might be possible in the future, like being able to have all of the world's information available to everyone all the time certainly is an implication of that, although it would be very hard to have thought of that in the 19th century, to dream that far ahead. Someone like Jules Verne may be an example of a person who could imagine that in the future. But I think we have the same thing with AI now. Like, we can think about, okay, these things are going to become much, much more cheap. We can produce things much more cheaply. What are the implications of that? How's that going to change society? And it's certainly something that I think is worth devoting a lot of thought to. A lot of dollars will be made, or a lot of Bitcoin will be made on, making great investments and creating great projects that will build out this future. If you can just think of what the implications are that AI will have on our future world and our economy.
There's a really good point you made too. Was the value of this? If there's an AGI, like, or a ecosystem of AGI, of autonomous agents that have specific goals, and they can create their own keys and receive funds in order to capitalize and get resources. They trade their resources for others. They need a money, and they literally can't use anything other than Bitcoin. That's the only thing, the only money that a computer can actually operate with, or a artificial intelligence with a set of goals can actually operate with and generate keys on their own, is Bitcoin. It must be a digital money, which means that if there is a massive productivity gain that comes from an ecosystem of machines that can communicate, set goals, and trade, it must only accrue to Bitcoin, like almost entirely.
Yeah.
It won't be able to be soaked up by the fiat environment. So that's a really, really fascinating way to think about it.
Right, and the price level of any money is really just the amount of economic activity that's being saved in that money. And if you're an AI that can only save in Bitcoin, suddenly you have all of this productivity going into savings in Bitcoin. That's when you get Michael Saylor's phrase being relevant: "Up only, Laura," because that value. It's just so multiplicative when you have something that can generate value that quickly, and without any other intervention from a human. It's really that it gets you close to the concept of a singularity, where you just have gigantic amounts of value being created very, very quickly. So this is, aside from the negative aspects of the global economy and the debt problem that we have, there is a positive path that you could get to hyper Bitcoinization, and AI is a potential way of doing that. So very interesting, great topic to think about.
There's one other element in the idea of paying off the debt through productivity in that regard too, is that from a fiat perspective, the debt, it's such a deflation, going back to Jeff Booth's model,
thesis,
so to speak, of thesis, thank you, of the fact that this is a massively deflationary force, is that an astonishing amount of new productivity with AI tools actually makes the debt orders of magnitude more difficult to pay off without the inflation, unless you are accruing it in Bitcoin purchasing power. So it would literally mean that the benefit of being able to pay off the debt would be in the fact that we are earning Bitcoin that is increasing in value. And then it's just like, what's $1 million in debt when Bitcoin purchasing power is $10 million? Like it has to have a currency that can accrue that value in comparison to a dollar, in comparison to what our debt is denominated in. So it would essentially be almost there's like this push and pull of these two incredible forces of a staggering amount of productivity that we need to figure out how to the currency to reflect, but then this astonishing amount of dollar denominated debt that actually gets harder to pay off if the currency gets more valuable, if the dollar gets more valuable. So that push and pull will probably either lead to inflation through the movement of that capital out of the dollar economy into the Bitcoin economy, or through the having to inflate the money simply to be able to pay it off, because it's also a downward pressure on wages in nominal value, and a massive push upward in wages in real value. But our debt is nominal. So it only matters if, it doesn't matter if your $1 a month in wages buys you a beautiful house and you're super rich. If you still have $100,000 nominally denominated in dollars, you've got a problem. But again, it's just goes to show how much is going to change and how much these things interplay with each other. And I really just think, again, is exit. Just like watch the dollar from afar and see how things go, because it could be, we want something that accrues that value, that allows us to share that value, and a sound money is the only thing that lets that happen.
Yeah, I get bullish thinking about like the AI buyers. Like, I don't know if a lot of models had that to think like they didn't think about the AI buyers coming into Bitcoin, because there really is no other money that can do that, right? That's what makes Bitcoin special. It's programmable digital money. It could do instant settlement. You can even stream it, right? These AIs can stream back and forth to each other based on how you use like this AI consciousness. If you plug into it, you can pay in real time for its like services or whatever in sats, and then turn it off with the snap of a finger. And that's only made possible with Bitcoin. And so what else are they going to use? It just makes a lot of sense to me. Let's actually pivot a little bit. Let's actually pivot to Lightning. Over the years, we've seen development and innovation on Bitcoin through its second layer after SegWit was upgraded, and then it enabled Lightning. We're seeing a lot of businesses start to come about, and a lot of maturity in that network. So I don't know if you guys have thoughts around Lightning. We're even seeing competition on the second layer protocols itself. We have like the introduction of Arc recently, which is kind of a competing protocol with Lightning. And so we're seeing a lot of innovation happen. And so it makes me really bullish when it comes to payments and kind of like the original idea of Bitcoin. But I've always thought it made sense to kind of build it on layers on top of the base layer. And so what do you guys think about what you're seeing in the Lightning world nowadays? I can throw it to either one of you guys.
Vijay, you want to roll? Are you?
Sure. Yeah. I mean, I could first talk about Lightning just as a user of Lightning. And I was at the Bitcoin conference. It was also good seeing you guys there. And as an author, I was, signing and selling books. And just seeing how well Lightning works actually was more reliable than Square Cash, which I was using to take credit cards for people who didn't want to spend their Bitcoin. It's really amazing to see how far Lightning has come. I would say this is again going to be maybe a controversial take as a Bitcoiner, and I've said this for a long time too, so it's not a surprise. I think the innovation is further along with Lightning than the adoption, and the reason I think that's the case is I see money going through several stages in its evolution to becoming a reserve currency, and one of them is becoming established as a store of value. I think it's hard for it to become a medium of exchange before it's deeply established as a store of value. And so I was always very critical of people in the early days of the Bitcoin community who were talking about Bitcoin as a medium of exchange, and it's going to be used to replace credit cards and stuff like that. And they would go out evangelizing to merchants saying, accept Bitcoin instead of credit cards. It's a way better system. The problem is no one owned Bitcoin at the time, right? So you go to a merchant, you say, put in this new payment processor and you can take Bitcoin. And their very rational response would be, well, why do I need to learn about this new thing when none of my customers have Bitcoin? Well, maybe 1 in 10,000 has Bitcoin. And now maybe today it's maybe a few out of 100 people have some meaningful savings in Bitcoin and actually want to spend it. So the problem on the merchant side is it's not widely used as a means of savings or a store of value yet. When people have a meaningful chunk of their savings in Bitcoin, they'll look to spend those savings, and then they'll go to merchants and they'll want a way to spend their Bitcoin. As much as I'm excited for the developments in Lightning, I still feel like we haven't really tapped all the value of that stage of the evolution we're at, which is Bitcoin becoming a store of value. And I really believe that we're not going to see widespread merchant adoption until you see, a very large fraction of the population saying, I keep a lot of my savings in Bitcoin. Until then, the incentive isn't there for the, average merchant to say, I really want to have a Bitcoin payment device. That's not to say it won't happen on its own for other reasons. For instance, Square is a company that, or I guess they're renamed to Block, is a company which builds payment processors, and they have this very strong affinity to Bitcoin, which is awesome. So they may just build it in because they want to build it in, and you could have merchants have the capacity to accept Bitcoin. But the problem is we just need to get more people owning Bitcoin and keeping their savings in Bitcoin, and then this issue of merchant adoption isn't a problem anymore, and people will be using Lightning for the very rational reason that it's the cheapest way to transact on Bitcoin. You don't want to buy a coffee on chain, as opposed to some of the B caches back in 2017 saying you want to buy everything on chain. You absolutely do not want to buy everything on chain, because it's going to become more expensive. And I think that's another topic. This year we're starting to see a real fee market develop in Bitcoin, which I personally think is a very healthy thing. And as I believe that fee market will continue to develop and Bitcoin gets close to becoming a reserve currency, you will have to use Lightning for those times when you want to spend your Bitcoin, because it just won't be economic unless you're buying a house or a car or something. It won't be economic to do your everyday purchases on chain.
Yeah, I agree with pretty much all of that, actually. Just because, especially in regards to Lightning adoption cycle and when we could expect to see a huge push. Granted, there's a couple of interesting and really hopeful elements here. Is that despite the bear market, Lightning adoption has continued to increase. And I think that's just kind of showing probably that outsized gap between the fact that development has outpaced adoption, so that adoption can continue to happen. And there are so many tools to take advantage of that are just kind of sitting on the table that aren't widely taken advantage of. There's a lot of like really low hanging fruit in Lightning right now. But one of the things which I think is actually both beneficial and a drawback, like there's an element of a trade-off here, is that we've actually seen a lot of increase in custodial Lightning, in the use of Lightning on Cash App, and the use of Lightning of Wallet of Satoshi, and like a bunch of these different custodial services, specifically because of the features that you can get and the fact that you can move Bitcoin very quickly, very cheaply. And Nostr is actually, I think, a big part of that as well, because everybody wants the LN URL, right? Everybody wants an address so that you can zap people on Nostr, and that experience is really freaking awesome. Just being able to like scroll through and like one click zap people is really kind of magical, and you just can't do it with any other system. But it does tend people, because you have to have a URL. It runs right back into the, how do you have your own URL for a website? You centralize, right? You use Squarespace, you use Luna, you use some other host. You have to have a public server. And in doing so, that tends towards centralization, because people just don't like running their own servers. That's always been the case of the internet. And we're seeing a lot of that same thing develop in Lightning. But I also think when you have a ecosystem of services kind of blowing up, and taking more advantage of it, and being more integrated with each other, I think that's an indication of the maturity of the space as well. There's simply a lot of people plugging in, and then with all this BRC20 token and ordinal crap and fees spiking on the network, I think a lot of people who had yet to kind of pull the trigger on their Lightning integration kind of felt stupid about it. They're just like, we should have focused a little bit more on having that available, because it is pretty broadly used, or at least accepted as what should be an option for people who are in the Bitcoin space. And, Vijay making the comment that he used it at Bitcoin 2023, like that's all I did. Is I used my Fold card and Lightning. And what was funny is I ended up walking away with a lot more sats than I left with in my wallet, specifically because I was paying for everybody's meals out when we were like going out to places or whatever, and making them all pay me back over Lightning. But everything at Bitcoin 2023, all the shirts and little gadgets and the little fun stuff and the butt wipes that I bought. I don't know why I did that. I think I only bought it because they made me laugh. But all the stuff I bought with Lightning, and it was great. It worked like a charm. All my drinks, everything. So it's cool to see. I remember it was like 3 years ago or whatever. There were like just a lot of trouble. You know, people had like payment issues. Everybody was like excited that it was like there and like you could do stuff with it. But it was a whole different experience. It felt quote unquote boring because it was just there and it was just obvious that it was going to be present, which is, I think, is a good, really, really good development. Yeah.
I mean, you make a great point. Like Lightning adoption is obviously continuing throughout this bear market, and the bear market, it's been a rocky one, I have to admit. There's been a lot of blowups, mostly in the broader cryptocurrency ecosystem. And this morning we're talking to you guys, and Binance just got sued by the SEC. So they just got charged for being an unregistered securities exchange, for issuing unregistered securities via BNB and BUSD. In the complaint, they specifically called out specific cryptos like Solana and ADA or whatever, Cardano.
I think they call it ADA
I don't even
or
know.
Something. I don't know.
They call them out though as like specific as unregistered securities. Yeah, so like we're kind of, you guys have experienced multiple cycles before. So if you have listeners here that are maybe looking at this, what would you say to them to focus on in a bear market? What's important to focus on? What's the thought process that you guys have done in the past that kind of gets you through that to the next cycle, to the next bull? Maybe throw it to you, Vijay.
So in a bear market, good news doesn't matter. It doesn't help. And in a bull market, bad news doesn't matter. It doesn't stop the price going down, or maybe it goes down very temporarily and then it starts shooting up. So where Bitcoin is now, I think somewhere around 26,000, at the time of this recording, I think it's actually a very normal and healthy place for it to be in terms of the cycle. I mean, Bitcoin goes through these 4-year cycles, and I believe it does that because of the halving. I think the halving still has an impact on Bitcoin's parabolic moves. So if you believe that the 4-year cycle is still intact, and I do, then where are we in the cycle? We are in 2019, and 2019 was, you can go back and find a tweet of mine, I think it was mid 2019, where I said the bull market is just about to begin, or it's just begun. And this is really when you start seeing the gradual move upwards, and then things start accelerating when the halving happens, and they really go parabolic the year after that. So I don't have any reason to believe that cycle is dead. I think that we're going to see that again, and I think there are certain things that might align really well with that. The previous cycle didn't go quite as parabolic as I think a lot of us expected, including myself, and I think the reason was the Federal Reserve did something that was sort of unexpected. It dramatically increased interest rates in a way that it hadn't done in 15 years. So it really was a long period of time before they had done that. And to me, it seems very unlikely that they'll be able to sustain interest rates this high for very long, because the system as a whole just doesn't work at high interest rates. Banks start failing. A lot of businesses can't service their debt. And then the economy goes into a recession and the Fed's hand is forced. I expect that's going to happen in the next 6 months to a year, and the Fed's going to have to pivot. And I think when it pivots, it's probably going to pivot right around when the halving happens. So I think you get this perfect storm in 2024 for Bitcoin to go on another one of these really incredible rallies that really blow everyone away. And at the start of the rallies, most people don't, especially people who are new to Bitcoin, don't expect how high it will go. I mean, there weren't many people in early 2017, who would have said Bitcoin is going to go from like $900 to $20,000. I mean, now that seems kind of normal. That's the way, path dependence works. You look at prices in the past and you sort of come to a conclusion that where you're at makes sense. But if you go back in time, it certainly would have seemed very incredible if someone came up to you and said Bitcoin's going to go from $900 to $20,000. Yet it did. So I think I would expect something like that to happen again in 2024 and 2025. In terms of the news, the SEC,
Yeah.
I think this has a lot to do with Gensler. And I heard some pretty compelling commentary that I really agree with, which is that this is really political. I don't think Gensler cares at all about the legality or whether what he's doing is good for the economy or anything like that. I think what he is doing is he's setting himself up to become Treasury Secretary, and he probably would have been under Clinton if she had won. And how do you become Treasury Secretary? Well, you have to appeal to the people in the party who become your advocates to the president. And who is he appealing to? He's probably appealing to the left wing of the Democratic Party. He's probably appealing to people like Elizabeth Warren, who think that there should be much stricter enforcement, that this is all just needs to be blown away, and these companies need to be killed. I think he's just like looking at that. He's not looking at whether this is good or bad or right or wrong. He just cares about his own power, and he's like, how do I further my career? And so everyone's getting caught up in this. All the companies getting caught up, and I expect that this is going to continue right to the end of Biden's administration or his term. And I expect Gensler is going to be hoping that in the next administration, whether it's Biden or not, he's going to get a promotion.
Guy, what's your reaction to the Binance news, and what would you say to somebody who's maybe in the bear market for the first time?
I would say, particularly in the bear market sense, the bear market, the Binance issue is not unexpected. It just kind of, and in the context of this bear market in particular, every time Bitcoin, the ecosystem, and the mind share that it takes in a new cycle, it gets kind of an order of magnitude bigger, not just in price, but just in the fact that people recognize it as something that exists and is going to be here. And in that particular context, I can't think of a bear market that was easier than this one. Because it's bigger, there's a lot of news. There's a lot of really exciting events and really exciting explosions of exchanges and all the stuff in the crypto market. But in the realm of, like, does it feel like Bitcoin has died? Does it feel like Bitcoin has some existential threat? It's like just kind of nice. It's just like this one's easy. Granted, we've been around here for a number of different bear markets. There's this little bit of PTSD back from the 2014, 2015 bear markets that it just felt like death. Like it was just like, it was awful everywhere, and the mind share that Bitcoin has accomplished in the last, has just stolen in the last 3 or 4 years to being this thing that's just clearly here. Like even the people who are against it, it's just the way it's talked about is different. It's not the same. Like Bitcoin is clearly here. And I think it also sets up a very interesting position for the next run, for the next cycle in, because all of these things, humanity moves in waves. And I think there's some real kind of elegance to the choice of the 4-year halving, where the halving cycle is still here, but it's going to mean less and less as time goes on. It has meant less and less, specifically as time goes on, because when you have a few million Bitcoin in existence and you cut the inflation rate from 50 Bitcoin to 25, that's a staggering change in the amount of inflation, amount of new Bitcoin that come into existence relative to the stock. Right, the stock to flow shifted massively. Now, when you have 19 million Bitcoin in existence and you're moving from 6.25 to 3.125, that's not nearly the inflationary shift. That supply is specifically a whole lot less in comparison to the stock, right? So as time goes on, that will mean less and less from a purely mathematical supply perspective. But what I think it will continue to do, there's something almost kind of natural about like a 4-year cycle and leveraging and deleveraging with like real market pressures. Like I think there's some sort of link there. Like if you look at our debt cycles in the fiat space, you almost see like this 8-year trend. And there's something about that length of time, this like kind of like seasons sort of this move that I think is actually kind of reinforcing. I actually think the 4-year choice wasn't merely, or if it was merely a mathematical choice, I think there's something that it sort of actually aligns with kind of typical leverage cycles in some useful way, not to mention the fact that it aligns with the US political cycle as well. So you kind of throw things back into chaos. So we kind of align to those things. But all that's a long way of saying that I think the cycle is not at all. I think we're going to continue to see waves in multiple different layers. We're going to continue to see waves, and the technology that is available now, when you have something like, when you have an entirely different social media network that has layers of, like, you can build marketplaces on top of it. Like, you're totally changing the environment of what you can do with the internet architecture. When you have Lightning and all of the tools and services that will be available to adopt it, when you have this political atmosphere and a banking crisis happening at the same time, when you have the potential of AI, in which productivity can only subsume them, can only really accrue to a digital currency, and when you have a political sphere that's talking about unregistered securities, and Bitcoin isn't really recognized as part of that discussion. Nobody's really making the argument anywhere that Bitcoin is a security. No. It's a wholly different thing, and the political apparatus talks about how they're going to regulate it and how they're going to punish the miners and whether or not it's climate friendly. But it's not a question of whether or not it's outlawed, or whether or not it's going to exist next year, of whether or not it's a scam. It's Bitcoin is here. How do we treat it? And I think that lends itself to a really, really powerful push in the next cycle, to the potential of opening up into a space of people who have seen this, have touched this. You know, there's that element of people who finally get into Bitcoin. It's like you have to touch it like 3 times, like 5 times.
That's Vijay touch point.
Was it Vijay? Was that a Vijay thing? Of course it was. Of course it was. I think there are a lot of people that have like touched it 3 to 5 times now, and not actually bought it, not actually pulled the trigger, not actually really used the technology. But the next time they see that price go 20%, 30%, 100%, they're going to wonder why they haven't yet.
Yeah.
And it's not going to be unrealistic for them to think, I should just get on Cash App, just buy some, just get on Swan. You know, Guy talks about it on Bitcoin Audible all the time.
I think that when the Binance news came out, it wasn't surprising at all. And you're right, Bitcoin's not really in the conversation. And if you really, everyone talks about, the regulation crackdown on Bitcoin, I'm like, it's not really on Bitcoin at all. Like, it's always about these other cryptocurrencies that we have been arguing have been centralized. They are controlled by founders. They are full of scams. And so you would think a lot of capital would think about this now differently, where they say, okay, I'm kind of woken up to this marketing scheme of these other cryptocurrencies, and we're going to invest in the real thing. And really, they don't have the regulatory risk when you look at Bitcoin compared to these other cryptocurrencies. And so I think more and more investors are going to start to see that. And we probably will see some capital inflows into Bitcoin compared to these other cryptocurrencies. So I just wanted to end with just a few like rapid questions, guys. Like, you could take 30 seconds to respond to these ones, or like a minute, real quick. I'll start with Vijay. What has Bitcoin given you?
An education. I was interested in Austrian economics, and I think the story of money had been told many times, but it hadn't been told correctly. And I think Bitcoin educated me on how money can come about. It's certainly much different to what a lot of people said it was. money could only come about as a commodity. So
Yeah.
definitely been educated by Bitcoin.
Guy, what has Bitcoin given you?
A way to turn my passion for stories and ideas into a career that I run myself. That is like getting to be a part of this space has really changed my life in what I am able to do. And it was important enough to me that I just took what seemed like a ridiculous risk to just like, I'm just going to build something in the Bitcoin space. And it worked. It worked.
Yeah.
And that was a big deal. And then the education.
Yeah.
100%
What about,
I've learned from reading a million things.
Yeah. Well, your podcast is amazing, man. So Bitcoin Audible, people check it out. Guy, if Satoshi was watching, what would you say to him, her, they?
Thanks, man.
Yeah.
Thanks for putting up with the shit, for building something that you thought you could build and just trying and then putting it out there. Thanks.
Vijay, if Satoshi was watching, what would you say to him, her, they?
Obviously, thanks would be the first thing, but I think I would also comment that Satoshi is the apotheosis of self-control. No one has had the self-control that he has had to do what he did, to create something that's this valuable and stay anonymous and leave, and to give us this gift is just, you couldn't have written a story like this. It's so incredible.
Yeah. Last one. Guy, can Bitcoin hit $1 million?
Oh yeah, of course. Yeah. Might do it this next cycle. And loosely dependent on what the value of the dollar is in there too.
Yeah. Vijay, can Bitcoin hit $1 million?
Yes.
Yes. Well, guys, this was a great conversation. We covered a lot. Covered AI, Lightning, unsustainable nature of the debt system that we have right now. We talked about bear markets. I really appreciate you guys coming on and sharing your wisdom. Everyone check out Vijay's book, Bullish Case for Bitcoin. Check out Guy's amazing podcast, Bitcoin Audible. He reads some of the best pieces in Bitcoin, including Vijay's blog post, I believe is an episode. And so where can people find you guys if they want to just follow along with your journey?
Yeah, I'm on Twitter.
Oh yeah, sorry,
Guy. I'm on Twitter, and I promise I'll be back.
I'm the Guy Swan everywhere. I'm on the Guy Swan on Twitter, Nostr, YouTube, and I'm recently with AI Unchained in the new show. I've been doing more video work, and I hope to do a lot more of that. So definitely keep an eye out there. But obviously, Bitcoin Audible.
Cool, guys. Well, thanks a lot for coming on Swan Signal. Appreciate it. And I'll see you around.
If you care about your financial future, you need to check out a couple of our offerings, including Swan IRA and Swan Private. Swan Private is our white glove concierge service where you get a trusted partner on your Bitcoin journey. We offer all kinds of education and research projects, as well as exclusive events to our Swan Private customers. Check it out today at swan.com/private. Also, Swan IRA. Swan IRA is the best way to gain exposure to real Bitcoin in a tax-advantaged account, like a traditional IRA, a Roth IRA, or rolling over your 401k. So if that interests you, check it out at swan.com/IRA today.